I mean, I don't even trust analyst research reports. So welcome to Telltales. I'm Mike Nicoletti. Every week, along with my co-hosts Jason Wallace and Hunt Lawrence, we bring you the cash flow memo. Get it at telltales.us. For the next 30 minutes, we're going to dive deep into energy, technology, and healthcare. So download the memo now and get started.
The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
Let's start. We've got plenty to cover. We always start on Exhibit C. The next time we do 25 based on what the Supreme Leader and the elected president in Iran say they don't want anything to do with Trump. I don't know whether that's a negotiating ploy, but if they really mean that, Trump's term for the policy for Iran is maximum pressure. They used 1.5 million barrels internally and exported 1.5 million barrels in 24. I have them here on 25 at 2.5. Unless they're engaging in a negotiating tactic, next time we do this chart, it's going to be less, maybe 2 million barrels. As far as Russia goes, it was great that Wittauer in a plane was able to pick up that young man who'd been in a prison in Russia for 3 years. But Pete Hegseth, the defense secretary, in a meeting in Brussels with NATO, with Zelensky there, or at least Zelensky's general there, said it's not likely that the western two-thirds of Ukraine is going to be able to join NATO. I don't know why the Ukrainians would trust anything other than Article 5 of the NATO agreement. I mean, the U.S., Russia, guaranteed Ukrainians territorial integrity, and then Russia invaded. Hegseth did say that there'd be support from the U.S., but no U.S. soldiers on the ground. So I'm not quite sure how I see Ukraine, Russia coming to a deal. So if we were doing this chart again, assuming that that's the stance, I think what Hegseth is saying is that Russia's already said there's no way they'll accept the western two-thirds of Ukraine being in NATO. So he's trying to explain, lay that out as not a possible condition or a condition that Russia would agree to. So Russia did 10 million barrels of oil, exported more than half of it, probably 60% of it, in not only oil, but products. So that 9.5 is going to go down to 8.5 or 9. What will happen in 25 is pretty soon there's not going to be any surplus capacity. I mean, there's always 2 million barrels of surplus capacity because that's what Saudi Arabia says they can do 12 rather than 10. It's not really clear that they can do 12, but that's their position. So I think the range in oil, which I've talked in prior Wednesdays, being kind of 70 where it is, maybe 50 if there was a deal with Iran and a deal with the Ukraine. I think now the range has gotten wider. I think if oil got really tight, it could trade up to 80. But since it depends on Iran not being able to export oil and Russia exports being down a lot, I still think the lower range is 50. I don't know how you make a decision about holding or acquiring an upstream company if you really think the range is that wide. Once again, if you own one, definitely wouldn't sell it because these are macro events. Who knows? If oil did spend a year or two at 50, I don't think 50 is a sustainable price. In other words, I think enough activity will slow down so that supply will decline, but it'll take a year or two for that to happen. So if you have a well-organized upstream company, I would hang on to it. If you've got one that you want to add to or have on your watch list, I would wait and see what happens as each month goes by. The good news is that the Trump administration, a month goes by, a lot happens in a month, so you may not have to wait too long. As far as gas demand, the cold weather helps enormously. everyone in the upstream gas business is fallen in love with the idea of gas being used as fuel to power data centers. I know I say this every Wednesday, but the power line on Exhibit B has gone up seven Bs a day from 21 to 25. And everyone says the future is LNG. Well, from 21 to 25, LNG has gone up 4. So power is outdoing LNG. I don't believe that there's going to be anything more than a continuation of trend. And of that 1.5 increase, I haven't seen a good study, but I don't think more than a third of that is from data centers. What's happened is, as there's more wind and solar, which is interruptible, there's more fallback on gas for reliable power that's available 24 hours a day, 7 days a week. So everyone in the upstream part of the business thinks gas is terrific and data centers is the answer. I think we've seen the same trend from 21 on. I think that trend's going to continue. The problem on Exhibit B is that 105, based on Platts numbers, we're already doing 105, and it's in February. And you'll remember, because I always repeat it, that in November of 23, we did 105, and then gas prices were just terrible. As you can see, they averaged 240 and 24. People started to shut in gas or delay completions. But if that 105 goes to 106 or 106 and a half, that's gonna keep that surplus high. And the futures price for 25 is 340. If we get to 106 or 107, I don't think that 340 price will hold. Or, well, the current strip, that's the time I did this last Thursday, the 25 price was 370 and the 26 price is $4. You start to see 106 or 107, those prices, even with the cold weather, those prices won't hold. Once again, if you own a gas stock, don't sell it. But if you have one you want to buy, it might be good to wait. On Exhibit A, I'm going to try to hurry because I'm taking too much of the 30 minutes, but March 14th is the date when the continuing resolution, which was agreed just before Christmas, expires. So a lot of work has to get done by March 14th. Also, the Treasury is juggling the books to try to cope with the fact that they don't have room to, in the debt ceiling, they're not going to be able to increase the amount of debt. And they can do that for some number of months, but they're going to run out of strategies to avoid violating the debt ceiling. And you have a 2-vote margin in the House of Representatives. And you have the Freedom Caucus led by a congressman from Texas named Chip Roy, who opposed Trump's idea, which was a good one, when they're doing the continuing resolution in the middle of December. Trump said, why don't we just put a suspension of the debt ceiling in? And Chip Roy and half a dozen others said nothing doing. Of course, Trump threatened to primary them or must support someone running against him in the primary. And they all said nuts. I think they're going to continue to say nuts. So how all this gets done by March 14th is kind of a mystery. Once again, if you're sitting with cash reserves for the market, I'd be inclined to sit on them through March 14th. The chance for having capital market really upset with a threat to our paying our interest and whatnot on debt is always possible there. I take entirely too long doing this, but Mike or Jason, anything to add?
Well, I think we could spend the rest of the 30 minutes talking about all the things that happened with the Department of Government Efficiency. I think the takeaway is that the sunlight is a very good disinfectant, and it may be a narrative that's important to the next set of elections here at the midterms.
Right. I know what Jason thinks. Jason thinks that Chip Roy's right.
I'm an engineer by training. I love efficiency.
Yeah. Mike and I have rehearsed a little bit of this. I don't know whether he and Jason have decided, but while we're talking about Doge and Musk, I'd like to spend, let's leave 5 minutes at the end for healthcare, but I'd like to talk about how news is delivered, or really, I guess we're talking media, but the news part of media. It appears to be the case that newspapers are, other than columnists, are becoming obsolete, and TV news may be becoming obsolete. Witness Fox, are those people, or CNN, are those people delivering news, or are they basically kind of pushing, opinions? And Jason, you and Mike are technically proficient, and you have been engaging in these conversations. What percentage of the news that you consume every day is from X or Twitter or something digital, do you think?
Digital. Well, I get it all digitally. I get a large amount of news from a more traditional source online, Bloomberg, but more and more I am looking to see what the conversation is on Twitter about, or X, about certain topics. Absolutely. Because I agree. I think, the likes of Fox and CNN are they're in the business of selling ads, and to get the most eyeballs on their programs, they're gonna they have a demographic, they have a customer base, they are going to serve them what they want to hear. They don't want to turn them off. So I think they are more entertainment source now versus a non-biased news source.
Any commentary, Mike?
Well, I don't even trust analyst research reports. So, I am actually very impressed with Twitter. I was a late adopter of Twitter, and it is a very good news source. The improvements that have happened to the product since Elon Musk took over are pretty significant, and they made it easier for people to get up to speed. It takes time to kind of curate the right people to follow and kind of teach the algorithm what you're interested in. And you can kind of screw up during an election season and consume too much political content. Then you have to figure out how to minimize that so you can actually get the stuff you want. So there are some things about it that are challenging, but I do find that Twitter's been a good source of content that frequently needs to be fact-checked. But sometimes those threads are really important. And we get access now to news that's coming out of Taiwan, for example, on what's happening with Taiwan Semiconductor that comes off in a local news source in local language that we might not get access to if it weren't for other people on X writing about it. So I think, it's become a very disruptive platform within the traditional media industry. And what you see is the power is being kind of pushed down to the author, which creates another set of conflicts, right? So previously you'd have a newspaper that may have an editorial board and maybe supported primarily by advertisements. And those advertisers sort of were okay with the idea that an unbiased perspective is probably the best one, and reporting the factual news is better, so that maybe people pay more attention to the advertisements, or they don't piss off more people than they otherwise would. And that's totally changed over time. The business model for a newspaper is subscription-based. So what is, the incentive then is to basically become an echo chamber. So us as investors have to go way out of our way to make sure that we're consuming content on all sides of the spectrum so that we don't end up in our own echo chamber. And so from the author's perspective, if you're a journalist, you no longer need the newspaper to endorse you if you're producing high quality content. But then you individually also have the same challenge of maintaining your credibility, but recognizing that subscribers pay your bill. And that's a challenge as well. And some of the authors that we follow have been public about the fact they've lost a lot of viewership because they posted things that were controversial. But I think as we've come through maybe a full media cycle and government transition cycle, those people have kind of become more credible because they were, they didn't capitulate based on what their subscribers said it did in the short term. So it's a difficult industry, and I don't know what that spells for the future, but I don't think it's going to get easier for the major broadcast networks or the newspapers.
On page four, we have a comparison of Netflix and Disney, and Jason in past Wednesdays has been kind of a closet fancier of Disney. And when Disney reported their results, their CFO, who seems pretty media savvy, made a point, which I happened to pick up while I was, spooning bananas onto my breakfast cereal or whatever I was doing. He said, we believe that with our streaming, we are going to have people leaving our streaming product on all day, because we're going to do sports, we're going to do news, we're going to have the best content for entertainment. Jason, do you think that is setting a bar way too high for someone like Disney, or is that the future?
I guess I don't have a strong opinion one way or the other. I can see his point, but the subscriber growth has stalled completely on the Disney platform. So I think they've saturated with the content they deliver now. They've saturated their market. They're going to start. I believe they're going to have a ESPN standalone streaming service out soon. So that's a whole different demographic, but I don't know. I have a hard time buying that you're going to stream sports all day and then stream Disney movies all evening.
My thought is different types of content warrant different delivery mechanisms. And it used to be we only had newspapers, magazines, and television as delivery mechanisms. And that's changed. So delivery mechanism should match that which is most efficient to get the content to the place you want it to be, and ultimately sell the advertisement you want or whatever. It's got to get to the right person at the right place at the right time. And to assume that everything is going to be on a TV screen or
whatever device, whether it's your phone or your computer or your.
It seems like the younger generation's watching more content on their phone, and then they might have the TV on as well, but that's not primarily where the attention is. So maybe the value of a television delivered ad drops because of that.
Right. And just to switch to Netflix has made a huge amount of progress. I mean, the three of us as investors just kind of missed it. The thing is, I started looking at $300 a share. Now it's $1,000 a share. It has free cash flow. It's trading way too high. It's trading about 50 times free cash flow. But Netflix, I guess, just got out to more subscribers. And based on their announcement, they said they're not going to announce their subscribers anymore. But their last announcement they had, because of, the Tyson fight and then the 2 NFL games over Christmas probably boosted their subscribers. They said in the future, Netflix stockholders should rely on our free cash flow or our revenue growth or whatnot. But how sustainable, Mike and Jason, do you think Netflix is? And we only have 3 or 4 more minutes on this because we have to spend some time on healthcare. Are they vulnerable because Disney or others just have have sports and have a broader range, or is Netflix the way forward, do you think, in terms of delivering entertainment?
I think that Netflix Netflix basically started, we'll skip forward to Netflix's story, but once they were streaming, they started by providing a lot of content that I think of it as like background content. So not super engaging, but it's the stuff people watch to kind of unload at the end of the day. That's gathers a lot of eyeballs, and if you can get scale economies on that, that's ended up being very good for them. So the question is, where do they go next as they move into different forms of content? And I think the most interesting deal on the table right now is Formula One. You could say that Netflix was responsible for Formula One's rise due to the documentary TV show called Drive to Survive. And in an interview with the CEO, talked about how, it would have been a much better deal for them if they had rights to Formula One. And now they're on the table, right? So we're coming up on a contract renewal year. And for Formula One, it's uniquely well suited to streaming because in a lot of the world, the races are in the middle of the night, or in the US, because a lot of the races are in Europe or different areas. Races end up being in the middle of the night. So it makes sense to stream the races. Today, everybody streams those races on YouTube, but I doubt YouTube will monetize as well as Netflix can monetize them. So content will flow to the place at which it can be monetized the best. And so long as Netflix is able to make itself the best place to monetize, it continues to win. And I think over time, the content that works on Netflix will change.
And along those lines, with the content flowing to where the eyeballs are, is Netflix has a really valuable advertising position in their app. When you log in and enter the app, they have this big billboard, and it's a preview of their latest show that they want you to watch. And right now, they're all their shows. I don't know how they'd work a deal to monetize it, but I mean, that could be an excellent place where, movie premieres, movie launches happen there rather than a theatrical launch.
Okay, let's take a quick break for a message from Oak Cliff Sailing.
This week at Oak Cliff, we've been working on finishing up the 4 match boats that we have in the shop, buffing them, waxing, compounding, finishing painting the bottoms, and doing some gel coat repairs. We've painted Tomahawk, and we have our volunteer Bill working in the sail loft with our high-performance high schooler Ewan fixing a par 40 spinnaker. And hopefully we can get all these match boats out the door at the end of this week and switch them so that we have fresh match boats for the buffing party.
And now back to the show.
Yeah. We've got 5 minutes left to cover healthcare. Jason spent our time last week on Vertex Pharmaceuticals. Any update there? I mean, basically very good news for Vertex.
Yeah. You'll see on page 15, they did about $11 billion in sales last year. They're forecasting $12 billion this year, so about 8% growth. That feels like a complete sandbag because that's their growth rate with just the CF franchise already. And they have a couple new approvals there. The new version is approved, expanded use into children of the prior version. It seems like they'll be able to hit that number without any of the other levers available. So this coming year, they're going to realize revenue from the sickle cell, the CRISPR gene therapy cure for severe sickle cell. They realize the sale at the end of the process, and I believe it's about a 6 to 8 month process to receive that treatment. So they're finally going to start recognizing revenue there. And then they said they're going to start shipping the Journavx pain treatment to pharmacies at the end of this month. So incredibly soon. Otherwise in healthcare, I don't have a ton of news as it relates to both Pfizer and Lantheus on this page. Some data got leaked from an early phase 1 Pfizer study for a new prostate cancer treatment that seemed like it was extremely effective. So that's positive for the treatment there. And how that relates to Lantheus is in the clinical study, they used one of the radio diagnostics to image and track the size of the tumor during treatment in the study. So Lantheus is cheap. It's 11 times cash flow right now. So I just see that as, I think there's a lot of negative sentiment around they can't prove definitively the effectiveness of the prostate cancer treatments, neither them nor Novartis. So there's negative sentiment there, but really the story to me just remains the expanded use of the imaging diagnostics. So as any of these new treatments come to market and you want to monitor progression of the disease and monitor how the treatment's going, you're going to use more of those PET scan diagnostics and more frequently per patient.
I think that story is one that's totally misunderstood, because it's a heads I win, tails I don't lose scenario. Because even if their prostate cancer treatment doesn't end up being industry standard, anything that treats prostate cancer is going to require the prostate cancer diagnostic. So they're going to win as everybody else wins in treating that disease.
Right. What about Harrow? What about that activity? I mean, that also seems to have some significant upside for the next year.
It does. I don't think it's covered very widely. The share price has been falling lately, but we're looking at prescription volumes and new prescriptions written and renewals, and they have great data there. So patients using their dry eye therapy are renewing the prescription at a much higher rate than industry norm. So we think they're in a great position.
Did we talk about their board member going to lead the FDA?
I don't remember if we mentioned that prior, but yeah, Marty McCary is a board member. I guess he'll probably have to step down.
Yeah, he already did. Yeah.
He already did, yeah. So he's nominated as the head of the FDA. I don't believe they've begun confirmation hearings at all on him. He's not a controversial pick. The controversial pick is RFK Jr., who I guess as of today has advanced to the final Senate vote, the final floor vote. So that should take place sometime this week.
A couple of minutes, because it's certainly in the news. How do the two of you view RFK Jr. in terms of how it affects investments in healthcare companies?
That makes it hard, but adding that last piece.
Yeah.
Just 2 minutes left. We could take up RFK Jr. I mean, it seems to me that he's totally unconventional. Clearly, research for healthcare is already a Doge target. This idea that the uplift on research should be more than 15%, when some people add on 50 or 60%, is going to be at the very least disruptive. One of my favorite things, which I learned from you guys, is that there's very little advertising for pharmaceuticals that happens in the world. Most of it's in the US. And when you look at one of the large pharma companies, they'll spend as much on advertising and promoting their drugs as they spend on R&D. So whether it be Doge or RFK Jr. or whoever else they bring in to regulate healthcare, it seems to me there's a fair amount of disruption. Let's say we're out on the water. Since Mike and I are sailors, we try to get Jason out on the water. It's good to be prepared for heavier winds or horizontal rain or whatnot. I mean, that would be my view of how to think about healthcare with the Doge influence and a very unconventional head of HEW. But give you guys another minute or two to comment on that.
Yeah, I think big pharma is at risk the most. They're the ones with the big, counting on the advertising to drive sales. I personally don't think the drug manufacturers should be advertising. You should receive the treatment that's best suited for you and your condition. But advertising must be very effective. They spend a tremendous amount of money on it. There's no way you won't see an impact to sales when advertising budgets are cut, if they are. But how's the profitability of a company change? They're going to spend a lot less on sales and marketing. They might realize less in sales, but cash flow potentially stays the same. I don't know.
Right.
Yeah, I mean, there's a lot of theories as to why Pfizer, for example, spends so much money on marketing. You know, buying that many ads also buys you protection from negative news. And this goes back to our discussion earlier on media, and he who foots the bill is the one that drives the conversation in media. So in the case of pharma, if pharma was to be restricted from TV advertising, that's apparently as much as 50% of television advertisers' revenue. So that's going to have to get filled from somewhere else. But you got to question where the narrative has been directed as a result of that. So frankly, like, healthcare is a weird industry because it is rife with perverse incentives. And I think what we've tried to do is identify where those, the companies that we're interested in, what are the pitfalls of their situation? Because people are going to exploit things when it becomes available to them. So only, you don't really want to be in one of those companies that's very likely to get blown up for being right in the middle. And we've been very public about our view on PBMs. But that's just one. I mean, the whole industry is really rife with some really messed up stuff. So I think it's positive for Americans as consumers. It's a little treacherous for investors, but I don't know. We're optimistic about healthcare broadly. So
I'd stay away from manufacturers of highly processed foods. I think that's really where his focus will end up being, and less on changing the dynamics of the pharmaceutical industry.
Right.
Yeah.
More on this next week. In the meantime, everyone be well and stay healthy, and we'll be here exactly 7 days from now. Take care.
The views expressed on this podcast are the host alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the hosts nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed. Accordingly, no representation or warranty, expressed or implied, is made as to, and no reliance should be placed on, the fairness, accuracy, timeliness, or completeness of this information. The hosts and all employers and their affiliated persons assume no liability for this information and no obligation to update the information or analysis contained herein in the future, and may or may not hold positions in the securities mentioned.